Welcome to Late Night Stocks. Today we will analyze Sofi stock. Sofi Technologies is now at $14.70 with $12 billion market cap. A lot of people were asking me if they should buy Sofi stock because stock price came to $13-14 again. That's why I decided to make in-depth analysis of Sofi stock. In this video first we will have a look at the company overview, what they do, what is their business model. After that we will check their financials, then we will make fundamental analysis based on their last Q3 earnings report. At the end, looking at our checklist and analyst price targets, I will give you some entry points and price target for Sofi stock. Let's start with company overview. Sofi's mission is to provide all financial services in one app. At the moment, maybe you have 4 or 5 different apps for financial services in your smartphone. At least you have one bank app where you make your money transfers. Then you have one app for investing where you invest your money on crypto or stocks. On the other hand, maybe you have one app related to your loans and credit cards and so on. That's why they say that your money works better when it's all in one app. And as you see, you can check your financial overview in one app. You can see your bank account here, your credit card debt, and your investment status. If you have a student loan, then you can check the status of this loan as well. With credit score, they give everything in one package. And so far, they have 2.5 million Sofi members. It looks interesting. I don't have any Sofi app or Sofi stock. That's why in this video, I will give you my neutral analysis. Sofi has plenty on its plate to excite investors for 2022. According to analysts, Sofi had a super growth so far. Its product offerings grew 108% compared to Q3 2020. In the past few quarters, revenue growth rate has been in triple digits range. Moreover, member growth has also been impressive at 96% on year-over-year basis. We can actually see these numbers in Q3 earnings report in detail. As you see, their member growth has been really steady. They have now reached almost 3 million members. If this growth continues and let's say Sofi reaches 5 million members, we will definitely see the reflection on the stock price. In Q3 2021, their guidance was around $250 million and they beat that by 10%. Growth and expectations, everything was good until Q3 2021. But Q4 disappointed the investors. In the last earnings call, they lowered the guidance for Q4. They are expecting around $277 million revenue in Q4 2021, which is the same as Q3 revenue. So this means management doesn't expect any growth quarter over quarter in Q4 2021. That was the main reason why stock price dropped heavily after Q3 earnings. So we said they had super growth so far. If they came up with better numbers in Q1 or Q2, they have still chance in my opinion. Another catalyst for Sofi stock in 2022 is their technology platform called Galileo. Galileo platform could potentially add value to Sofi's business in the future. Galileo's robust infrastructure powers more than 90% of the digital banking in the United States. Maybe you're asking what is Galileo? Let me explain you shortly. Galileo's business model is banking as a service. They say that you handle the customer experience, we do the rest. So this technology platform handles the background work for card issuing and digital banking with APIs. At the moment they are powering these innovative fintech companies. Of course, one of them is Sofi and the other ones are TransferWise, Monzo and MoneyLion. Growth in Galileo accounts actually shows the success of this platform. In Q1 2019, they had 17 million accounts. Now they have reached 90 million Galileo accounts in Q3 2021. Galileo technology platform is an asset of Sofi. If the growth in these accounts continues, this can definitely boost Sofi stock as well. If we check the revenue breakdown of the Sofi company, as you see in Q1 2019, they had $93 million revenue from lendings, from loans, and this 93 billion became $215 million in Q3 2021. To understand the significance of Galileo platform, we can check the technology platform revenues. It was nothing in Q1 2019 and it has reached $50 million revenue in Q3 2021. At the moment, 20% of the revenue comes from Galileo platform, and this can grow as well. So far we talked about the growth potential of Sofi company and Galileo technology platform. What can be another catalyst for 2022? The answer can be bank charter approval. Sofi has been chasing a bank charter for a long time now, and it appears its search could be over soon. This analyst expects that the green signal for bank charter can come by the first half of 2022. But what is the advantage if Sofi becomes an official bank? Here is why the bank charter will transform Sofi Technologies. Becoming an official bank brings Sofi security. It will increase their lending capacities. They will no longer rely on third-party banks so that they can drive their operations costs down, and it will improve their marketing and pricing control. Here is the illustrative impact of a bank charter for Sofi company. So dark blue shows the no bank charter scenario. In light blue you see the extra revenue coming from this approval scenario. According to expectations, they will have $1.2 billion revenue in 2025. If they have bank charter, they will have another $300 million revenue. Due to these key benefits of bank charter, durability, lower cost of capital, increased growth in lending, they will have $200 to $300 million extra revenue. So if this approval comes, then Sofi stock can fly to the moon. So far we talked about all the positive things, but there are also some negative points of Sofi stock. One of them is loan payment pause and 0% interest. On December 22, 2021, the US Department of Education extended the student loan payment pause through May 1st. You can ask why these student loans are very important for Sofi company. If you look at their lending segments, you can understand the idea better. Here you see we have three lending segments: student, personal, and home loans. Until 2021, Sofi's business was mainly driven by student loans. It was more than 50% in 2019, now it is around 30-40%. So at the moment they are damaged by this additional 90 days for student loans. But after 1st of May, things can change. Student loan payments hurt the business, and there's another point I want to discuss about Sofi company. Sofi Technologies currently has a relatively high level of debt. Typically, debt shouldn't exceed 40% of your equity. However, in Sofi Technologies' case is 54%. Note that a higher debt obligation increases the risk around investing in the loss-making companies. They don't only have high debt, also low cash. If you check their Q3 earnings report, you can see that they have $533 million cash and cash equivalents. In total, they have $2.7 billion debt. This balance sheet concerns me. They are providing a lot of services, from investing to insurance, from loans to credit cards. Can they afford this growth with this balance sheet? In every quarter, they are burning approximately $40 million. It is expected that company will be profitable in 2023. So if they have $250 million loss in 2022, they need to raise some money. Maybe they will do some stock offering so that they can raise money for 2022. This scenario looks very similar to Affirm. In my previous Affirm video, I warned the investors that Affirm had more debt than cash. They had $1.9 billion debt and $1.4 billion cash. And this was when the stock price was $125, and in this video I said that the stock price can go even to $85, and now Affirm stock is below $85. That's why reading and analyzing balance sheet is very important. If you look at the big picture, our checklist, on the one hand they have really good management and they are disrupting this financial business, bringing all the products in one app. In addition to that, their market cap is not that high and they are promising a lot of growth. On the other hand, they are not profitable yet. We are expecting profitability around 2023, and their balance sheet concerns me. This 90 days extension of student loans, low cash in balance sheet and negative cash flow can hurt the stock price. In total, Sofi stock gets 7 out of 10. Here you see the analyst ratings for Sofi stock. It is around $20-25. And recently Morgan Stanley updated their analysis and gave $22 price target. When we look at the stock price, it looks like stock price is going in cycles. We are in this horizontal channel between $14 and $25. After their IPO, they have reached $25, even $28, but when hype ended, they came back to $14 levels. Between $14 and $16, we had 2 months consolidation period. Then we had another hype until Q1 earnings. After that, investors have realized their gains and we came back to $14. This time consolidation period was lasted around 3 months. Then we had a hype run until Q3 earnings. In this earnings, management lowered their Q4 guidance, then investors sold again. Now we are at $14.70. This consolidation period can last until end of January or February. During this time we will have Q4 earnings as well. Until Q4 earnings we may see $14, but we may even drop to $11 for a short period of time. If you are bullish on SoFi stock, you can buy under $15 in small amounts. As I mentioned in this video earlier, in Q2 2022 we may have this bank charter decision and this can boost the stock. And on the 1st of May, this student loan payment starts. So after March or April we may see a lot of interest on student loans of SoFi. So in general I am positive and bullish on SoFi stock, but this cash balance concerns me. If they do stock offering, then stock price can go lower. That's why making these small amount purchases can lower your risk. I'm not investor advisor, so please do your own research and make your decisions based on that. I hope you liked the video. I also wonder what you think about SoFi stock. Would you buy from these levels? Is it already on your portfolio? Let me know in the comments down below. And please don't forget to like the video and click that subscribe button.